Hi, everybody. This is Joe Garner, Director of Research with Emerald, and I'm joined here today by Dr. Terry Smith, Director of Life Sciences, and Dr. Nishit Trivedi, also Director of Life Sciences with Emerald, and also co-portfolio managers of one of our newest actively managed ETFs, the Life Sciences, the FM Emerald Life Sciences Innovation Fund. So welcome. Happy Groundhog Day to everybody. You know, a lot of people are not happy with Punxsutawney Phil, but they're always happy with Digby. So today, I want to talk a little bit about one of the more interesting sectors of the market, one that was maybe surprised some people and how strong it was last year, and that is the healthcare sector. I mean, we're coming off a year where the Russell 2000 growth healthcare sector was up over 25%. LFSC had a terrific year, up over 50%. What was the key to the success last year? Why was it so strong?
Hi, Joe. The key to the success pretty much is that things couldn't get much worse from where they were. We had 2 or 3 years of terrible performance from healthcare, and in the back half of the year, we had a really strong turnaround from the biotech space. Biotech actually covers both molecular diagnostics, and it covers companies that are launching drugs. It covers companies that are developing drugs. And this is a real area of expertise for myself and Nishit. We spend a lot of time here. I think LFSC, like more than half of our investments, half of the portfolio is in the biotech space, and we spend a lot of time there. So we've had a number of things that are going on there. Notably, as I mentioned, M&A has been happening. It's a tailwind that's going to continue, but this is something that big pharma needs to acquire smaller companies. This is the innovation engine of the healthcare space. So we saw some M&A happening. We saw some strong performance from companies launching drugs, doing better than expected, and we saw some positive clinical trial results. On the diagnostic side, I'll turn it over to Nishit to talk about what he's seeing in the biotech space.
Good afternoon, Terry. Good afternoon, Joe, and good afternoon, everyone. I would say 2025 started as an interesting year with the volatility that came with tariffs and some of the uncertainties that came along with that. But then I think we focused in certain areas, as Terry highlighted, in biotech. And then in biotech, say on the diagnostic side of the aisle, we focused in an area known as liquid biopsy, looking at cell-free DNA and looking at the applications of this technology in oncology and other areas. Similarly, we kind of took that whole concept of focus on growth, focus on innovation to other areas like med tech, medical devices, and others. And fortunately, 2025 turned out to be a pretty good year.
Okay, so let's flip the calendar forward as we go into 2026. Where are some of the areas you're focusing on, Terry, first in the biotech space?
So we're focused in similar places to where we were last year. I think about 60% of the therapeutics companies we have actually have revenue. And there's been a new phenomenon that's been happening in the last 2 years or so. It's that these companies, they can launch a drug and they can launch it really well. They can beat expectations. You have numbers going up as the market's starting to realize, oh, this can be a viable company on its own. It doesn't need to be acquired. And when you don't need to be acquired, you can get big upside from an acquisition, but you can also survive just fine as a company independently, beating numbers and approaching profitability. So we've seen a lot of that happening. We're even seeing companies that were small cap, now they're mid cap, and now they're starting to be acquirers themselves. So the pool of acquirers is no longer merely pharma. It's actually some of these companies that have emerged from the small cap realm and are now profitable, which is really healthy for our whole ecosystem. So we're focused on companies that are launching drugs well. And as always, we're focused on companies that are making drugs in phase 3 clinical trials, phase 2, that will have positive results.
One of the areas you've talked a lot about in the past has been rare diseases. We've seen a lot of advancements in the rare disease space. How's that look for this year? Still a lot of innovation there?
There's still a lot of innovation. The beauty of the rare disease space is that we understand the cause of the disease generally, so we have a higher than normal probability of success. These drugs are launching extremely well because the patients are mostly identified. They're very eager to get the drug. The pricing is very high for these drugs. You can see these companies turning profitable 2, 3, 4 quarters after their launch, which is really fast.
Yeah, that is. Nishit, in the diagnostics and medical technology space, where are some of the areas that you're focusing on for this year?
For this year, focusing, the initial focus is in oncology, because I think in oncology, the whole concept of cell-free DNA and the whole concept of liquid biopsy is a huge market. This market, as we look at 2025, is about, say, 5 to 7 billion from a TAM perspective. As we look into the future, the TAM here is going to be growing into the 50 to 100 billion size TAM. It's going to take 5 years to develop, but it's a large TAM. And there we are identifying the leaders within that space, as well as the smaller, younger companies that are coming with innovative technologies. So we are kind of focused on who is the leader and then who has that next gen technology. I think these technologies are cool because they can kind of be used from a screening perspective. There are 120 million lives in the US that are eligible for screening, but even 50% of them don't go through the screening process. So we need to improve on that. I speak to a lot of doctors and they kind of say, in cancers like colorectal cancer, I'd love to find those cancers when they're stage 1 or stage 2 because I can help the patient. Whereas if you find them later in stage 3, that becomes challenging both for the patient and for the healthcare system and the family. So we really feel these newer technologies will help from a screening perspective. Then they can help because once a cancer is identified, these technologies can help identify what are the driver mutations in that oncology. This helps the physician to identify what's the best therapy in this particular situation. And not only that, these technologies can also help in monitoring cancer over a longer period of time with a 3-month follow-up, 6-month follow-up, 12-month follow-up to kind of see if the cancer is recurring. There was just a publication this morning from Mayo that was really interesting that highlighted the value of this technology. And so what Terry and myself do best is we focus on science, read about some of these innovations on a real-time basis, keep up with where the science is flowing, and look at companies that are doing the right thing, have the right culture, and have the right profile.
Wonderful. Exciting stuff, guys. I want to thank both of you for being here with us today to celebrate Groundhog Day and talk about a lot of the exciting opportunities that we're seeing in healthcare and the life sciences industry. Thank you. Happy Groundhog Day, everybody.
Happy Groundhog Day. Thanks.